you for your patience. We are nearly headed to the end. Welcome, my panelists. We're excited to be here. Specifically, we are focusing on return on investment, specifically the yields that are necessitated by technology in real estate. I'm joined by Michael from Jay-Z, CEO. I'll be giving him a chance to speak. Sean, Mariah, and Christabel as well. And I will dive right into the questions so that I'm looking forward to an insightful conversation. And let me begin with Christabel. Christabel, I know affordability for property, especially for first-time property buyers, is important. As well as for developers, it's key for them to have a good return on the investment. And I would like us, perhaps borrowing from your experience, you would share part of the technologies or innovations that are working in that space. And you could also take a chance to tell us what you're doing in that space as well.
Okay, thank you, Paul. So at Rensco, we are playing a pivotal role within the affordable housing space. So essentially what our platform does is that it makes it very easy for anyone who's keen on buying their first homes, and those tend to be our primary customers. So when they go on the platform, they are match-maked with affordable properties and affordable finance. And for that particular reason, then they are able to understand what their monthly repayments would look like. So this is beyond that 20%. So realistically, then they are able to understand that once they're ready to get started, then it becomes very easy for them to make those monthly repayments because thankfully, because of affordable home loans, those repayments would pretty much match what they'd be paying as rent. So that's more or less on the customer side of it. Now, on the developer side of it, as far as ARAI is concerned, so the house hunting process can be quite lengthy. And again, the platform has reduced this process from months to minutes. So on the developer's end, essentially what that has done is that it's increased uptake of their units in developments. So we've seen scenarios whereby by the time the developer is, let's say, at 50%, then sales uptake are at anywhere around 80% or 90%. So that has really helped as far as increase in sales uptake is concerned.
Okay, thank you. Let me come to Sean. In a real estate setting, we have different stakeholders, especially in the execution of the project. Probably you could dive into part of the technologies that are playing in that area. And I would want you to touch on what has worked for other markets, but again, what is practical for our present market, and what gains that are either achievable or been able to achieve through employment of such technologies.
Thank you for that question. And also thank you for all that remained for this panel session. So we'll try and make it entertaining. I know tech is a bit not that fun, but we'll use analogies as well. So, great question. One of the major problems we have in our industry is what we call data silos. Every one of our disciplines work in a different quote-unquote closed ecosystem. So you'll find the bank have their own proprietary systems, developers are working with their own proprietary systems. I'm an architect by profession, so we have our own specified BIM software that we use. Now, what has happened, it's caused slow data flow, especially a lot of fragmentation. When you're trying to retrieve data or information from one department to one team, there's a lot of process and follow-up emails, I'm sure you know, that happen. So one of the main things we wanted to solve was that, the fragmentation of data, and we tried to create an ecosystem. So the ecosystem is called Sitesia. What we do is collect all these different data silos into one ecosystem so everyone can retrieve the data from their relative departments and teams. And what we're seeing is a lot more efficiency, especially when it comes to decision making and finance, which I think is extremely important. We need to know what's actually happening on site for anyone who's a project manager, and that information needs to be readily available for the financial institutions for them to feel confident enough to release payments or certifications. So in a nutshell, there's a lot of fragmentation, but there's a lot of opportunity for these different disciplines to work together. And that all depends on how much we're willing to adopt technology. And then we will see the ROI.
Okay, I'll come back to you on that. Michael, I think one of the ways that, construction in Kenya particularly, and in most African markets, we have thousands of vendors, different products, SKUs, loose regulation around that. Where do you see opportunity as far as application of technology is concerned in creating a bit more efficiency and harmony in the entire construction industry? And what are you doing specifically within Jersey?
Thank you, Paul. Thank you, audience. The key areas that I see of much importance in technology is the marketplaces that are in existence today. For example, Mjenzi aggregates the entire supply chain of construction materials, interior decor materials, etc., to have one set place where everybody who's looking for these things can find them at one place. So for one, it reduces the logistical harangue of looking for things, which saves you time. Secondly, it allows for the vendors to post their products and showcase their products in one platform that can be seen by people not only just in Kenya but worldwide. So you have the vendors having the peace of mind that their products can be seen way much further than their actual physical location, which makes it very easy and much better for them to trade. With this kind of technology, you'll find that the key thing that is being sold here is trust, because we have seen several cases where anyone who's trying to do something in terms of construction always comes up with a problem or has a bad taste in their mouth after seeing a BOQ or a quotation from the contractor. And vis-a-vis the quotation and vis-a-vis what they get to see at the end of it. So this cuts out all the red tape of so-and-so told me they can get me steel at such and such a price versus you seeing the vendor who's selling the particular product that you want, seeing the price, everything is above board, everything is on the table. You can get to talk to the vendor. You'll be able to get and discuss discounts with the vendor in real time. Get to see the products if you wish, send the project managers there to see what it is they can get, and have your products shipped within the period of time that you want. So it cuts a lot of red tape, cuts a lot of middlemen here, cuts a lot of people trying to be dodgy with money, because you're sending somebody for ABC and they'll tell you, no, I have a brother who does ABCD and they can get it for you at a cheaper price. So when the problem hits the fan, you can't go back to that person, because you can't probably fire your brother or your wife because they brought you somebody who sells steel for you. So you end up with egg in face. So these particular solutions help to reduce a lot of harangue and a lot of headache when it comes to construction.
Okay, so this one, technology has been argued to be great in real estate, but one of the things that all of us would agree is that adoption is very slow. I would use the words very, very stubborn. I have ran a number of models in PropTech. I believe I've met some of us in their businesses. And one of the questions has always been, is it a matter of convenience? Is it a creation of an existing problem? But I would perhaps want to ask Sean, what is the one thing that slows adoption of technology in real estate? Is it that the results are not visible? Is it the players? Is it the market? Is it the timing? What do you think, in your view?
I think they vary depending on the person that you talk to. So from our aspect, we've noticed there's been an apprehension towards new things, especially things that might not make sense in the technical aspect. So you'll find people like us in the tech space use a lot of analogies to try and simplify this model. And adoption takes time with any industry. I think we take for granted that technology needs to grow and needs to adapt. I'll give you an example. FinTech right now, everyone knows about it, right? We know M-Pesa, we can see all the FinTech companies that are happening and existing in this ecosystem. But before M-Pesa became M-Pesa, it took them 9 years. You know, they were forgetting the fact that they had to use the mamamboga or the kiosk lady to actually educate a lot of people on what this thing is called M-Pesa. So there's an adoption curve that needs to actually happen. And in our PropTech field, I wouldn't say we're like 100 years behind, but we really are. Because we need to stop looking at results in the sense that, can this get me money now? Or how much do I save with this aspect or this arm? Some of these things could be a speed factor. So it might not save you on this project, but now you've halved the time it maybe would have taken you. So now I can do 2 projects. So in ROI and adoption, we have to be a bit more open in terms of the use case and looking at it instead of just one dimension, can you make me money now? Or can we look at it as an ecosystem that can grow over time? So I think that's what my take would be on adoption. That's not fear. And also have the patience to understand some of these ecosystems do take a long time for the returns to actually come on board.
Okay. So Christabel, as a follow-up of what I've asked Sean, I think one of the reasons why, like he has mentioned, there are various reasons why people are not fast to adopt technology, particularly in real estate. So what things must we demystify, or what misconceptions exist that probably as a developer, as a contractor, as any stakeholder in real estate would be looking at if they were to make a decision on what technology to avoid or to adopt in that case. So what are some of those misconceptions that exist about technology in real estate?
Yeah, Paul, I believe that's slowly changing. So if you look at the real estate industry, traditionally it's brick and mortar. So unlike within the fintech space where a lot of payments have to be done digitally, of course that has also taken time. But for us, real estate, if you're looking at this building, there's lots of brick and mortar. Obviously, there's things like building construction technologies, there are softwares for managing the spaces, etc. So my thought process as far as adoption of technology in real estate is concerned is that it's slowly changing. Secondly, there is the element of showing value. So I believe one of the challenges as far as uptake is concerned is that sometimes the end user is not able to sort of quantify the value that they're going to get from a specific technology. So I believe the onus is also on us to sort of show them that, for example, if you're going to use this particular construction technology, then you're going to either A, save time, or B, save cost, or C, both, if that's possible. Then if it's on the software side of it, then when it's things like mitigating revenue leaks, then if you can also quantify that, because they're not in the tech space. So it's upon us to actually show them value as far as that is concerned. Now, on our end, what we've done is, so primarily we've been dealing with buyers within the affordable housing space. But then in addition to that, what we're doing is we are now also moving towards renters because we believe that's where the masses are. So for example, if you look at urban areas in Kenya, so over 70% of people are renting. And the discussion centered around affordable housing is how can we actually get people to be able to own homes. So yes, we do have affordable home loans within that space, but then over and above that, there's a need for alternative credit assessment, which we are doing that through tracking tenants' rental payments and enabling them to be able to use that as sort of as an assessment when it comes to accessing rent-to-own or tenant purchase schemes. So on the developer side, what that is going to do is that it's going to de-risk them in the sense that they are sure that their cash flows are guaranteed as far as collections is concerned, because even for them at the end of the day, there's the ROI aspect of it, and that is generated from the cash flows.
Okay, thank you. Michael, probably rephrasing the same question. So for a developer or a real estate player looking at adopting whether building technology, whether we're talking about alternative building methods, or even an alternative financing option, investment and so forth. So what should he or she be on the lookout for? Look, how do you evaluate a good technology proposition as far as real estate is concerned?
I think for that, we'd have to look at what are the options about financial inclusion in terms of real estate. For example, we have mortgage, we have affordable housing, financial breakdown of how they're meant to pay for that house, whether it's rent and get it later, or pay a mortgage now, or outright purchase, or take a loan for that matter. Now, when it comes to technology on this, you find it's quite scant in Kenya right now, because the options we have are very, very minimal. We are now just breaking the ice on some other new features. But as coming from that particular perspective, you'll find that what Christabel has, what they're doing right now is, I think, the way forward as to where everything should be going. Because you have instances where people have stayed in a house forever and ever, and they still not end up owning it. And they've been paying rent of 50,000 for the past 20 years. You would find that if the same scenario was there starting today, that you can have your house after paying 50,000 in another 15 or 10 years, and you end up having your house, you'd find that that would have been very popular from a very long time ago, only that it's starting now. So we can look at it and say that the options are now starting to gain traction in terms of financial inclusivity, in terms of real estate, but I think there's still a lot to be done, because the mortgage has not been a very popular thing amongst Kenyans, because somebody looks at it and says, why am I paying 50,000 shillings for 15 years? One, the mortgage system in Kenya vis-a-vis what happens in Europe is you find the market value of that house in 15 years has been tabulated as how it is going to be in 15 years, not what it is at today. Vis-a-vis how it is in Europe, that they look at it at market value today, and you pay mortgage on that amount of today. So if this house is 5 million shillings today in Kenya, they're looking and they're going to expound on it in 15 years, how much does this house cost? And that's what you're going to be paying for. You'll be paying for the amount of that house in 15 years. So it's not been a very popular thing. So I'm looking at it, I'll say, hey, 5 million shillings, if I have it to spend, why not look for a small plot in Kamulu, which is going to cost me 500,000 shillings, and build with the balance of that? Vis-a-vis looking at 15, who's going to be there 15 years? What's the guarantee that I have? Is it insured? Do I have a trust that I know that my family is going to get this house later? There are all those questions that pop up. So it's not been a very, very popular option in terms of housing. But the options are coming up right now, where there is like the buy now, pay later kind of feature, which I think would be a very top popular thing within Kenyans who really feel like to be seen to be up there. You'll have your house, you're not paying rent. There's this notion of say goodbye to your landlord. There's all that's coming up, but it needs to be handheld to a level where everybody feels my 20,000 shillings per month rent could perhaps get me a house later at the end of the rainbow. So that's something that needs to be fanned a bit.
Okay. So in your view, is it a cultural problem? Is it an information gap?
We can say there's a synergy of both, because when you say cultural, you have those who are from the rural area have land, but they think about having property in Nairobi, while those in Nairobi who get money think of building structures in the rural area. So there's a bit of a mismatch here. The education system also tells you, actually we can call it cultural a bit, because from when you start school, you're told work hard, get a good job, and build your house. Now what's going on is the people who are in that stature, we can say if the demographic of about 65 years old going to 70, have humongous houses. The children are in Australia, they're married there. The parents are in Karen and wherever have humongous houses. They need telephones to find out where their spouse is in the same house. And they find that they have a white elephant that they have. Their kids are never coming back to this. Burial is back in the rural area. So it becomes, it's like a vicious cycle right now.
Okay, coming back to you, Sean. And I think I would want you to mention part of the technologies that could not, maybe it's not something that you're doing, but something that you've observed that is able to yield results that are very measurable, specific, that for a developer looking at employing these technologies. For instance, if I have a property and I'm considering, let's say, tokenizing it for more liquidity as a developer versus perhaps doing the conventional path. In comparison with what exists and what technology can provide, would you highlight some of the technologies that have very specific gains?
Yeah. So absolutely, thank you. That's a good question. So I'm more on the developer side. So we focus mostly on the execution bit of construction. And what we've noticed, or one of the things that's a big gap as you're talking about technology, is we're kind of brute forcing systems that are supposed to work for, let's say, the financial sector. We're using Excel sheets on tracking a 3D world, right? Those are 2D representations, but we work in a built environment. So there's a lot more context that needs to be put in besides what you see on 2D planes or paper. And that's one of the modules that we created, was like Visualize. The one thing that we've also noticed in the ecosystem is regardless of the report that's sent to your office, you would want to go to that site to verify that a lot of the work that's being done has been done. So those are one of the main things that we wanted to put in. So like a visual model that could walk the site once a construction manager goes. So how we do it is we strap a 360 camera to a hard hat. All project managers can walk the project as they normally do. And we take those images and create or stitch them together to create a digital twin. So now we have an exact replica of what's on site versus what was planned. So we can always go back and overlap them and see, all right, did we actually finish this wall on time? Did we maybe delay on certain parameters? Because we really need to adopt new technologies when we're thinking about this space. You wouldn't navigate a storm with last week's weather report, right? But in technology, we're using those floor plans that were done 8 months ago, but what's happening on site is constantly evolving and constantly changing. There are new change orders, maybe there's a new design that was incorporated, so we really can't focus on that Gantt chart. It needs to be dynamic. It needs to be a feedback loop of what's happening on site. Are we on track? Are the finances involved? Are we getting sales from Rensco to come in? There's all these moving parts that are not actually articulated and can't directly be represented on just a 2D plane or softwares like Excel. So we have to look at how can we build the real world, the virtual world, back into the reality. So it might take in some 3D components, it might bring in some financial tracking, and most importantly, softwares like BIM. BIM is hugely beneficial, but it's not adopted widely by a lot of the developers or contractors. And one of the problems is obviously cost. All these softwares that we mentioned in the data silos, like architectural, project management, they all incur a cost. Sometimes it's not cheap, sometimes it's expensive, so you'll find we would rather not use softwares, even if it makes sense, because we're looking at it as a cost factor. So by democratizing access to even like BIM data, which we've done, so that you don't have to pay those closed circle ecosystems, you can use ours and get back into the virtual realm. So those are the type of technologies we're looking at, how we can bridge real world aspects and stop using software that might not tell the same story.
So for someone looking, struggling to find the aspect of whether it's cost saving, increase in the asset value, for someone who is looking to kind of pinpoint that decision-making angle? Like,
Yeah.
what is that one? Because at the end of the day, they're either trying to optimize on their costs, they're trying to save, they're trying to increase the value of that asset, they're trying to attract buyers. What is that one thing that will make that developer decide, let me go for this technology? Because it's traceability in terms of the final benefit that I get to enjoy. That's sort of where I'm trying to aim at.
Great question. So we have to look at it in concept of hierarchy. So in each development, for example, this table is sitting on the stage in room B of the ground floor of Pullman Hotel. There's a hierarchy of data that goes up from the littlest of details all the way up to the master plan of the project. Now, what we don't do is take into account the day-to-day activities. For instance, if a bag of cement has come in and is delayed, can we trace back up the hierarchy where that will affect in terms of the project? Can we look at it? But we tend to be like, don't worry, we can do it tomorrow. Or the orders, we can always push them to next week. But I'd even pose this question, another analogy. Have you ever been stuck in traffic and you're wondering, maybe there's a car crash in the front or there's something that's going on, but all of a sudden the road opens up. There was no traffic, there was no accident, but maybe someone crossed the street. So the first car stops, the second car behind it stops, the third car stops again. So before you know it, a traffic jam has started rather. That's what happens with the information. So sometimes when that bag of cement wasn't delivered on time or that certificate wasn't paid, before you realize where that effect could have been, you're in a backlog. Maybe you're 3 months down the line and you don't know why we're delayed because we couldn't trace back exactly what happened. Software like ours does that. So one, it benefits us because we can scale with any size project. So if you have 1,000 units, you can trace back where that cause of delay could be and trickle back to where you can finance it. As opposed to now looking back at those reports, all the Excel data, which could be cumbersome and time consuming.
Good enough. Let me go to Christabel. And Christabel, I would want you to speak about so maybe part of the alternative, maybe aspects that technology brings around property financing, and again affordability as well, that you think are valued. It doesn't have to be something that you're doing at the moment, because, for instance, we have a lot of statistics in the market. You know, sometimes even from whether you're looking at asset management, say like 40,000 property managers, only 2,000 of them are licensed, and so forth. You know, we talk about the housing gap that exists, but as well we talk about sometimes there's a glut, sometimes there's a mismatch between what is there in the market and what is not there. What are some of those technologies that, if we employed them, would first of all take advantage of the existing opportunities that are there? So without seemingly looking like we're creating a new problem, and something that perhaps developers, you know, different stakeholders should, you know, capitalize on so that they maximize their gains out of technology.
I believe one of the challenges that developers face, whether in affordable or luxury or commercial real estate, is data. Now, when you look at why is data important, so if, let's say, for example, I'm going to put up an affordable project, I need to be able to understand from the point of concept all the way up to construction. So first of all, where is there demand, number one? Number two, as far as demand is concerned, so do people want 1 bedrooms, do they want 2 bedrooms? Then also, what sort of the size of the house do they need? What's likely to be the uptake once I put this product in the market? So there are various data sets which are currently lacking in the market. And that's one of the benefits as far as technology is concerned. And even for us on our end, we do track that data in terms of all the inquiries that we receive. So, for example, which neighborhoods are most popular? Then there's also the element of assessing and understanding. So all these people who want to buy properties, what sort of what sort of income bracket are they at, what sort of family size, etc., because all those are very key and instrumental when it comes to the decision making when it comes to buying a house. Now, I'm going to be a bit biased and talk about what we do. So the thing is, if you look at, so the app, by the way, guys, is called Nesty, which we've just launched. So if you want to track your rental payments and be able to get an opportunity to access homes through rent-to-own model, then that's where you need to be. Now, so if you look at it from two facets, so Nesty ideally is customer-facing, tenant-facing, and the value proposition is for them to be able to track their rental payments and get an opportunity to access rent-to-own homes. Now, we discovered that in the course of championing affordable home loans and educating the market about them, there's still a lot of stigma as far as accessing or even being receptive to affordable home loans is concerned. Now, you find scenarios whereby constantly people are scared in terms of, okay, what happens if I default on one payment, or is the bank going to come and repossess my house? So as much as those questions may seem that they're not too, they can sort of be off-putting to customers. Then the second thing we've also noticed is that we've had several conversations with our partner banks, and most of them will say, okay, fine, we can actually extend financing to prospective homeowners who are within the gig economy space. However, when the rubber meets the road, when it comes to that application, then there's always one missing thing. So out of every 5 applicants who do not necessarily have a payslip, only one person will actually qualify and go all the way. So that means we have about 80% who are locked out of financing, yet these are people who they're renting their homes, they're actually paying really good rentals. So then what happens, the opportunity lies in just matching that rent to properties which they can be able to access through alternative routes. Now, on the other side, for developers who are now, developers and also institutions who are keen on participating within that affordable housing space and are having conversations around tenant purchase scheme and rent-to-own models, for them, their challenge is, okay, fine, if I offer this product in the market, who are going to be the takers, number one? Number two, again, the question of data. So where do I set up this development? What should be the price point? That comes in terms of like holistically looking at it. A 1-bedroom is going to go for 4 million, 3 million, 5 million. Then secondly, how far along should I stretch out the payments? Should it be a 5-year payment plan? Should it be a 10-year payment plan? What sort of interest rates should I sort of apply as far as those long-term payments is concerned? Then there's also the element of even them accessing patient capital, cheap and patient capital. So once that is resolved and they are able to actually understand and see that there's a pool of customers who have been consistently paying their rent, say over a 5-year period, and they have really good rental scores, then the platform just does the matchmaking. So there's value add in terms of they are guaranteed that their cash flows are going to be consistent. Returns to investors is also secured. So in a nutshell, that's what I'd say as far as technology bridging that gap, both from a data perspective and also from a return perspective for both stakeholders is concerned.
Michael, I want to speak, perhaps ask you a question about scale. In one of the arguments that have been made about technology in real estate, particularly from a Kenyan perspective, is that we have sort of maybe dozens or even hundreds of companies or technologies doing the same thing, or rather, that are working within the same line of impact. So would you speak briefly about how do we leverage on perhaps what he's doing, what Christabel is doing, what I might be doing, in order to get better benefits and probably have faster adoption? What do you think should be done by technology players in order to have better adoption?
Thanks for that. From top of my head, the first thing would be to partner, to have affiliate partners in what he's doing in project development and what she's doing in affordable housing, and so that we have visibility and have one song that we're singing. Why I'm saying this is because when each person goes their own way, you find some will go 1 mile and have muddied the waters already because of maybe they did not find out why somebody else did not make it there. And by so doing, they just end up making the same mistake that the previous one did. And it muddies the waters because the users, the customers out there get to see and find out that this is just the same as the other one. So it erodes any confidence that was there before and will erode any confidence that should be coming in later. So first thing would be to have affiliates, to have meetings of such manner, and to iron out whatever kinks there are in anything that was there before in the prelude of what should be coming up next. Over and above this, there's a lot of stuff in the social media, in news about circles and building projects that go sideways. And people don't speak about them to completion. You just find people saying, oh, my money went like that, this and that went this way. And that's the end of the story. There's no follow-up as to what happened. Was the outcome eventually successful, or was it just punitive all the way? We never speak about that. And for example, for Sean, maybe if he has had any problems with maybe a diasporan having a problem, has the diasporan ever been known to get a good end of story, or has it all been success? See, those are the kind of things that we all need to have to come together and embrace. Otherwise, going lone wolf, you find yourself holding a big piece of the pie, and much of the pie is a lot of the muddy water. And so to speak, you find we have a lot of diasporas out there who have terrible, heartbreaking stories of the things that they have endured in doing the developments and purchases of their homes back here at home. A lot of it happens through their own relatives, which you can't fault. Some of them are so embarrassed to speak about it because somebody very, very, very close to them, a loved one close to them, did it to them. So it's also close to them that they do not want to speak about it. But the stories are too many, massive. So these are the things, because when you want to go lone wolf, you have to deal with them yourself. But if you have an organized setup where you're dealing with finance, and we are with you on my platform, you're dealing with project management, she's dealing with affordable housing, and we're all under one sort of roof, we can check each other, we can actually advise each other, this is the way this went, this is how this goes, this is what the diaspora is talking about, can we address this issue right now? What's going on? Who's selling what? At what price? Is this the fake cement? Is this the fake timber that's coming from Sudan? Is this and that? All these questions can be looked at from a more generalized view. But the thing here is everybody wants to be the next unicorn, the next, whatever you may call it, but the next Musk. I've just made $1 billion out of this, and here we are. So we're now looking for this and this. But when you look at it in retrospect, it will take quite a while to get to that level. And thus, in that while, we should all look at what are my strengths and what are my weaknesses. Can you take up, maybe you're better with what I'm weak at and push that agenda. And maybe I'm strong at what you're weak at and push that agenda. And eventually we'll end up getting further. Yeah. Maybe to add on to that, you'll find in project management, if we are building your house and you're in Texas, we have something called the geolocation pictures. So you get your invoice of your cement is here, and this is the lorry, this is the truck that came with it, and here's a picture with a geomap, not a photo of your neighbor's house to show you how far we've gotten, but something in real time. Then another thing that we make sure to do is we tell you that all the products you are going to buy are from that platform of ours, which means you can actually compare, oh, this is what, so why didn't they buy from this one? They're on the same platform. And we'll be able to tell you, oh, he did not have this, but you can actually call him yourself and find out. So everything that is going into your project is coming from one platform, which is actually, to be quite honest, accountability in its own self. And you can actually question each and every thing that goes into your production of your house by virtue of what you're seeing has been purchased from there. You're getting the invoices as they come. You're told to bring in your own invigilator so that his story and the project manager's story go in tandem. So all this is basically just to bring out trust. Now, a lot of new founders, when they look at the money part of it, you find that they don't want to go the long way. And to quickly get money, you find they'll do some shortcuts here and there. And that's where the trust breaks down. And that's why very many people have a bad taste in their mouth when it comes to development and houses. It's a very sensitive issue. And to be quite honest, that is what I would prefer to sell before getting a cent. Yeah. Thanks.
Because of time, maybe I can give every one of us some closing remarks. But Christabel, I'm curious. Very high investments in real estate, better than capital markets or lean hires. But why low adoption, near zero adoption of technology? I mean, basically people have been able to invest and get good returns from a conventional point of view. But why not anything in technology? Yeah, as you give us your closing remarks and as well.
Okay, so first of all, it's very clear for us to be able to emphasize that technology is an enabler and not the business itself. So, secondly, I hope by the time we come back here next year, we'll be having a different conversation around technology. So if you ask me, like I mentioned earlier, yes, it's low, but it's getting better. And again, just like I mentioned before, it's now upon us to be able to show the different stakeholders who are the primary users of, the end users of the whatever it is that we're building, the value add in it. But beyond that, there's also an element of cost-benefit analysis, which I didn't talk about earlier. So I believe, as with anything else, if you're going to adopt it, then it has to also make sense for you. So there's the element of, yes, I'm able to save XYZ, or be it in terms of, in monetary terms or in time. But then on the other side, what's the cost of that? So obviously, if that cost-benefit analysis doesn't make sense, then adoption is not going to take place. So those are some of the remarks that I'd have even as we close this.
Okay, thank you very much. Sean, final words?
Just to echo what you said, I think we need to look at it as a holistic thing, where we're looking at it not as a magical solution, which we call technology, that will solve all your problems. That's not what it is. There's going to be a curve where there's going to be new learning, there's going to be new ways of working, and if the faster we can adopt these new challenges and these new technologies that are ahead, I think the faster that we can push this boundary of what we're doing with PropTech. And that's one of the things I would encourage people. So don't look at it as a magic solution, adopt it, but remember, you also have to be willing to do the changes. You have to be willing to want to improve. All the efficiencies won't matter if it's not part of your KPIs or your own internal monologue as a company. So that's one thing. Technology can also only go so far. It has to be an ecosystem of people and like-minded individuals like this event, where we can showcase what we're doing and for you to now adopt and take it as your own and run it as your own. So that's my parting.
Okay, thank you very much, ladies and gentlemen. It was great having you. Thank you.